Good day. I hope it's a good day, right? Thank you for attending this session. Today, I will talk about something. I think some of you, it's the first time hear about implosion. We know the economic recession, and we know the economic depression, but it's the first time, I think, many of you hearing about economic implosion. So what is economic implosion? Oh, this is me again. Economic implosion, when we talk about economic implosion, it's something caused by outsider effect. Outsider effect. But first of all, let's go back to the history, to the global economy during the pandemic, COVID-19 pandemic, and see what happened here. What happened was a huge, really huge contraction. It was a record contraction. We saw 3.1 contraction in the global economy. This is not the problem. It is not the problem. Next year, I mean in 2021, we saw a huge growth in the GDP. Everything was going smooth. Everyone can spend money. And from there, the problem started. As you can see, in 2022, the growth cooled down. But when it cooled down, it didn't go to slow down. It was growing. The normal growth for the global economy is 3.1. It's normal. When we talk about 2012 to 2019 average growth, it was the same. So the economy was fine, and the economy is growing. The unemployment was going down. We started to spend more and more and more, and that caused the real problem, which is inflation, right? So economic growth or fast economic growth causes inflation. Increased economic growth led to higher spending. Everyone wanted to go for a trip. Everyone started to spend more and more and more. And after that, immediately, we say strong spending. And finally, we all know higher demand is one of the organic causes of inflation. Inflation started to rise in January 2021. Many people think the inflation started on 2022, but in fact, it started to increase in January 2021. No major central bank started to act when the inflation goes higher. All the central banks, Federal Reserve, ECB, European Central Bank, Bank of England, and most of central bank was only concentrating on growth. After that, between April and October 2022, inflation rose dramatically. We saw an inflation. You know what inflation is? It's when the price of the products increases. It was the biggest increase since decades. And don't forget, of course, the Russia-Ukraine effect on inflation. We all saw higher prices. We also energy prices raising a lot, right? So from here, we need to admit there was an effect, but it's not the only effect. It's not the only effect of rising inflation. The economic growth was the problem. It was really strong economic growth. Everyone is spending. After increasing the inflation started to cool down. In the United States, we saw inflation at 4.2, down from 5.3. Even in Eurozone, it dropped from around 10.6 to 5.2. And in the UK, we saw the inflation dropping from 11.1 to 6.8. So I want to ask you all, please, by raising hand, please, who is satisfied with the inflation right now? I mean, do you feel when the inflation goes down, the prices went down? Who think the prices is fine now? Do you think the prices are good now? Did the prices decrease or it's continuing to increase? It's increasing. Every day the prices are increasing. Therefore, declining inflation doesn't mean the prices is going down, right? Sorry? Yeah, the only period the price is going down is deflation. That's right. But we are now living in hyperinflation. Hyperinflation, prices continuously going up. So when we see a high inflation, central bank, and here's, please concentrate here. Central banks start to raise rate. So inflation rates are still high, even it's going down. So we are having decreasing inflation, but money purchase power is decreasing. What I mean by money purchase power? Remember last year, if you was spending $100 to buy something, today you maybe need 110, 120. So that's the purchase power that is decreasing. The same product you are buying, you need to spend more money to get it. This is the effect of the inflation. When the inflation is high, the prices goes up. But some of us maybe didn't feel the heat of raising the prices. Why? Because we have a growth in wages. Wages had a really strong growth since January 2021 till now. In the United States, average hourly wages increased from around $25 to $29. That's around 16% increase. Something else. When we have an increase in wages, and the prices is going up, does it mean everything is fine? Definitely no. If we adjust the wages growth with the inflation, we will find something really incredible. We can find we are losing money. Even with higher growth, even with higher wages, we are losing the real money. We are losing the purchase power. Why? As an example, I will talk about the United States. The increase in wages was not enough to cover all the increase on prices. So any United States citizen lost 0.8% of his or her purchase power. Here's the fact. Let's see what central banks are saying about inflation.
It remains too high.
Inflation continues to decline, but is still expected to remain too high for too long.
Inflation is too high. Let's start with that.
Inflation is too high. When a central bank says inflation is too, it's not high, it's too high. Moreover, most of central banks, major central banks, believe that the inflation will take lots of time before it go down to the normal. The normal or targeted interest rate in most central bank is 2%. So when we see a higher inflation rate, that will lead to increase in the prices and decline in the purchase power. So inflation is still too high, then the interest rate will remain too high for extended time. This will lead for the implosion. Let me now discuss the implosion. We know the explosion when something goes, a bomb, something like that. But the implosion, as you can see here, there's a strong wages growth. There is strong spending. However, on the other hand, central banks are pushing down the economies. Central bank targeting the economic growth. Central bank are targeting our spending. Central bank want us to spend less. Do you believe that? Yes. That's what our central bank is doing now. Interest rate pressure in the economy are increasing. Strong labor market still now. We have a strong labor market, a strong spending that is preventing the collapse till now. But the implosion is coming. The implosion is coming and the global economy will sink into a recession. Most of people think that, well, we are not heading to a strong recession. It will be mild recession, or as central bank says, Jerome Powell says, soft landing. There is no soft landing. I believe that we are going to a deep recession. Even as we can see, a lot of people think there is a mild recession, or the chance for a recession is very low. But let's talk about the bond market. Yield curve do not agree with the projected recession probability. This is one. 10 years and 3-month US Treasury bills suggest a recession sometime in 2024. Yield curve, maybe since 1950s, every time the yield inverted, I saw a recession. In 2019, I suggested a recession. I talked on some TVs about recession. The economy was very good. The economy was growing. But when I saw the yield curve, I said that. I don't know why. I don't know why, but there is a recession coming in 2020. I did not know about Corona, COVID-19. I didn't know about anything, but the yield curve never lies. There is a recession, and we saw what happened in 2020. 3, most of the US government bonds yields are inverted. Therefore, there is a huge pressure in the economy. And what we are gonna see in 2024 is the implosion. The economy eventually will crash. Interest rates are very high. Most of central banks are trying to cool down the economy. But day after day, we will see the economy collapse, maybe in 2024. It's my own beliefs. So therefore, some people say, let's keep the cash. Let's keep the cash with us, but don't forget, please, the purchasing power will decrease because of high prices, and investment risks are higher and higher. I am telling you that. You are coming to the expo today to see the investments, right? But I'm telling you, the investments risk is growing day after day. Maybe investment in banks, bonds will be fine. We will get some profits, right? However, anyone invest in bonds, let me talk about the United States. In bonds, anyone make deposits in the banks will get profits. That's right. However, the real value, the purchasing power of that profit will be negative. Remember the wages when we minus the inflation from the wages, it was 0.8 minus. That will happen too if we invest at any instrument, give us any profits below 5%. Here's the implosion. This is called the implosion. There is something huge pushing down the economy, the high interest rate. That's why I chose this word. I choose this session to be about something you never talked about in the economy, which is implosion. Maybe next year you will hear it a lot. I don't know. So where can we invest? Let's talk about the rules. What is the rules for the good investments in the certain circumstances? First, we need a highly liquid investment. Whenever we need to liquidate our investments, we need to do it just like that. Two, the investment we are looking for must have manageable risk. We need to know how to manage our investment. Three, the place we are looking to invest in should have multiple assets. It is the nature of economic crashing, but as an implosion. If the investment allows us for short selling, it will be an advantage. I remember back in 2008 when lots of people made a lot of money when the US market and the European market crashed. It is the short selling. So it will be an advantage if where we invest there is a short selling, and if we have ability to move between investment, of course it will be, and moving quickly between investment, that will be better. So am I talking about Forex? Maybe. First, Forex matches all the criteria. Maybe some of you will tell me how we can manage our risks in Forex. Forex is too risky. Yeah, that's right. Forex is too risky for those who don't know how to manage risks. I'm not talking about stop loss. There is something called stop loss. Yeah, all of us know it. But I'm talking about managing risks. It's something different. And it's characterized by high liquidity. Moreover, the wide range of traded instrument is a good advantage. Sometimes I need to invest or trade gold. That's good. But at a certain second, not a moment, certain second, I need to move my trading from gold, for example, to oil. I need to have the ability to close this investment or trading in gold and go directly to oil, for instance. So I think Forex is something good during the next few months. And remember me, please, in 2024. If you started to hear on TVs, the economy is collapsing, remember someone from Windsor Broker called Sarkis. He was talking about implosion. Remember? As people remembered us in 2020, we didn't know there is a corona back to 2019. But what happened? There were a recession. So remember, but I have some limitation for anyone. Is there someone never traded Forex? Please, if you are new to Forex, don't trade. Talk to me first. I will be honest with you all. For everyone, for new traders, please come visit us in booth 10, please. There is a huge risk if you don't know about what is CFDs. Not everyone telling you what is CFDs. Come and I will tell you what you are trading. You are not trading gold. If anyone telling you are trading gold, no, you are trading gold CFDs. If anyone telling you are trading in euro, no, that's wrong. You are trading euro CFD. So come, I will tell you and learn you what is CFD. Two, contract for differences, CFDs, is really risky. And never trade Forex. I never trade Forex before understanding contract size. There is 3 rules. As a trader, there is 3 rules. I'm willing to learn it to everyone. 3 rules. Rule number 1, the wrong contract size will lead into losses. Contract size. Come and ask me about it. And trading Forex expose you to leverage. leverage. Some people say the leverage is the problem, but no, it's not the problem. And although Forex can be an option, it's not the only. It's one of the options. And finally, contact us, please. As I told you, please, you are welcome to come to our booth. And of course, as a Windsor broker, we offer free workshop online and inside our offices around the world. So please don't hesitate to call us at any time. Thank you very much for attending. For any questions, we don't have a time now, but for any questions, please visit us in the booth. Thank you very much.